So which all capital assets are covered under Article 13? If you look at the scheme of Article 13, it would generally have paragraph 1 to 4 or paragraph 1 to 5, which deals with taxation of specific capital assets. And thereafter you will have either paragraph 5 or 6, which is a residuary clause. That will deal with every other capital asset under the sun, which is specifically not covered here. So the capital assets which are covered are immovable property. Let me just remove this. Referred to in Article 6. This is generally paragraph 1 of Article 13, right? So an immovable property which is referred to in Article 6. Second, movable property. Now first was immovable property, second is movable property, but which movable property? Which is forming part of business property of a PE or a fixed base. It might just be that the non-resident may have a PE in India, and this PE has certain movable property, right? If this movable property is transferred, since the PE is nothing but an extension of the foreign company, this is considered as a transfer by non-resident, and therefore treaty benefit is available. So the taxation of transfer of movable property which forms part of business property of a PE is taxable under Article 13(2), right? If there is any other property which the PE has, if it is an immovable property, obviously this article does not apply. If there is movable property other than business property of a PE, so if he has some other movable property, let's call this as MP2, if that is transferred, it is not taxable under Article 13(2). That will be taxable under the residuary clause. Ships, aircrafts, boats, etc. operated in international traffic. So if a non-resident has a business of operating ships, aircrafts or boats, which he is operating in international traffic. So if it is between the Indian ports only, which is domestic traffic, then it is not covered. If that is being operated in international traffic, that's something which is covered there. In addition to this, plus movable property pertaining to such operations. That's covered in Article 13(3). Shares of a real estate company. Here what happens is that normally your Article 13(1) is applicable on transfer of immovable property. If a person, just to avoid taxation of Article 13(1), instead incorporates a company in India, right? So there is a non-resident, he incorporates a company in India, which then owns an immovable property. Why would he do that? The reason is, if he directly owned this immovable property, the taxation would have been in Article 13(1). And generally Article 13(1) gives the right to tax to the source state, which is India. In order to circumvent this, what people do is they incorporate a company which owns the immovable property. Now, when you transfer the shares of this company, what you are transferring is shares. And shares transfer is not covered under Article 13(1). To avoid taxation, things like these are devised by the non-resident or the foreign companies. To deal with such specific cases, there is a separate article which deals with transfer of shares of a real estate company. And clause 5, like I said, any other property. If there is a specific clause for all these, if there's a transfer of any of these, you apply that article. Besides this, if there is any other capital asset, that is going to be taxed under Article 13(5). Even this movable property belonging to the non-resident, which is not forming part of business property of the PE, will be covered under Article 13(5).